What's up, stock compounders? Brad here. So this is a real treat. Guy Spier did a talk with my guy Investing with Tom, and I'm going to share my highlights from this video here. This took place just a week ago on the Investing with Tom podcast, a really new channel on YouTube. So make sure you guys check it out and subscribe to that one. So to open things up, Tom asked, how has your investment process evolved over time? Guy Spier really started in kind of the Ben Graham value camp, and now he's looking at, these new economy businesses, right? He's got Twitter in the portfolio. It's a small position. It's near the bottom, but clearly his framework for how to think about what makes a great investment has changed over time. Guy Spier points out all value investing is intelligent investing. I think he may have gotten that flipped around. He's coming off a cold here, but maybe he meant to say it that way. He talks about Ben Graham, right, who talks about buying nets. Even though Ben Graham preaches nets, right, he talks about this kind of quantitative formulaic approach to finding great investments. Ben Graham's best investment was Geico. Okay, it was a company that really didn't fit these formulaic frameworks that Ben Graham had developed. It sounds like part of that, Ben Graham really wanted to create something that the everyday investor could actually use. And with Geico, it was outside of that. But I think that's an interesting data point to look at, to notice, the best investment from the godfather, in a sense, of value investing was not this traditional Ben Graham style value investment. He says, I have not yet bought in any size any of these new economy businesses, right? So Guy Spier clearly trying to learn everything he can about kind of the new economy businesses. But he's not quite there yet in terms of making them, staple positions in his portfolio. He's asked about not selling, right? Guy Spier seems to have this knack for just sitting on his hands, right? Quarter after quarter, we see the 13Fs come out and there aren't any changes the vast majority of the time. Now, this is really what's behind that for Guy Spier. If I were to look at things that I've sold in the past, and if I had just held on to those things, I think my returns would be better than they are right now, which is a shocking idea, Guy Spier points out. He talks about selling Moody's, selling Crystal. Monish Pabrai at one point mentioned when he likes to pour salt into the wounds of Guy Spier, he brings up Crystal. Okay, I think Guy Spier put a couple million into Crystal in the early 2000s. If he had simply held that Crystal position, it would be worth more than Guy Spier's entire current portfolio. So that's the power of doing nothing. Making one really great bet and just letting it ride. So it's something I've thought about. Actually, I'd kind of like to analyze Pabrai's portfolio, looking back over the years. It's a little hard to figure out how to do this because some of how you get cash as a portfolio manager is to sell positions and then roll that cash over into new ideas. So it's hard to look through an investor's history and say, if they would have just left that alone, kind of for each of their ideas, what would their portfolio value be today? There's flows that have to be considered there as well. But it's a fascinating idea. He says, I keep bringing out these new share classes which charge people less and less money. Okay, and this is a really fascinating point that he makes here. That means the investors get to keep more and more, right? Fees are less and less. The investors get to keep more and more. So I don't feel uncomfortable with this buy and hold strategy. I don't have this feeling like I have to demonstrate to my investors what I've done for them lately. Okay, so I think that's really smart. Bringing down the fees over time so that there's more alignment. Investors are perfectly comfortable if Guy Spier isn't doing anything for years at a time, because they're not paying him to do stuff, right? They're not paying him exorbitant fees, thinking you've got to earn this, right? You've got to have this activity, and I'm sure a lot of his investors are already aligned with that. That the just because he has more activity doesn't mean the fund is going to perform better. But even subconsciously for Guy Spier, I think there's a big advantage, right? If you're charging very reasonable fees to your investors, it's a lot easier to kind of have that patience, have that discipline to wait until that fat pitch comes. My fund has a very substantial position in Indian Energy Exchange, IEX, and a substantial position in BYD. Now, as far as I know, this is the first time Guy Spier tells the world that he owns BYD. I've never heard him say that before, and it's not required to be disclosed. So that was pretty cool. Neither of those show up on 13Fs, right? Because BYD is Hong Kong, Indian Energy Exchange is in India, and so there's a number of portfolio positions that don't show up on 13F. So even if it looks like Guy Spier has done nothing quarter after quarter via 13F filings, that's just the U.S. portion of the portfolio. So it's important to keep in mind. In terms of inaction, he says, I cultivate a powerful bias toward inaction. Part of that is reminding himself, if I had just sat still with some of these great positions, my returns would be better. Of course, the magic is figuring out which ones those are and holding on to the right ones rather than holding on to the dogs, right? That's where these investors really, really earn their money. When you're learning something new, you need to remind yourself of it often, but the more you know it, the less often you need to remind yourself. So here he's talking about how he structures his day, kind of the workflow. It was kind of an interesting look behind the scenes part of this conversation. And again, one thing I really enjoyed about this conversation, Guy Spier just seems so relaxed chatting with Tom. He's getting out his notebook, he's kind of flipping through pages. He's really kind of going into the minutia of the day-to-day in the office of Guy Spier. So to me, that's fascinating stuff, right? It's something we don't often get to hear from a super investor like Guy Spier. Usually, they're on TV and it's kind of the quick hitting questions, and it's a slower pace here, which I really appreciated. He says, I leave myself space in the morning to write. Okay, so the most important things Guy Spier does in the morning, because that's the most productive time. In the afternoon, he does the busy work, right? The things he doesn't need to be kind of fully dialed in mentally to tackle. Those things he can deal with in the afternoon. And I think that's really smart. That's how I'm more and more trying to adjust, my daily workflow is to preserve those couple hours in the morning when I'm most crisp to do the most important one or two things for that day. He's asked about the lunch with Warren Buffett. I think it was in 2007, so 15 years ago now. He says, I got a double benefit from the lunch with Buffett. The learning I got from Monish Pabrai was obscene, okay, better in many ways than the learning I got from Buffett. Right, so Pabrai, I think, bought like 2/3 of the lunch, and Guy Spier bought 1/3 of the lunch, and it really, cultivated this lifelong friendship since then between Guy Spier and Monish Pabrai. When you get the opportunity to be in the presence of a master, spend the time and money. Okay, Guy Spier was very hesitant to spend I think it was $210,000 or something like that Guy Spier spent on that lunch with Buffett. That's been paid back many times over since then. So his advice here, if you have an opportunity to be in the presence of someone you really admire, spend the time and money, right? Don't shortchange yourself on that opportunity. Asked about position size. Okay, position sizing. He says, I had a 10% position in Horsehead Holdings. And for those of us who follow Guy Spier and Monish Pabrai, we know that one didn't work out so well. He says, after that, I would never invest more than 5% at cost in one company. Okay, that's kind of a hard line in the sand for Guy Spier. He'll let it grow, but he won't invest more than 5% of the portfolio at cost in one position. He says, I know this will reduce my returns. Okay, it's not optimized for returns, but I'm into longevity, right? Staying in the game, managing both my psychology and the psychology, the emotions of my investors, right? And he talks about Alibaba here. If he has a 1% position in Alibaba and it drops 50%, no sweat, right? Not a problem. If he had a 10% position or a 20% position in Alibaba and it dropped 50%, that would be difficult, right? And Guy Spier he has no interest in allowing that kind of influence on his psychology as an investor, as a fund manager. And this is a big part of the game. It's a big part of the game of investing is, creating rules that help you, right? Help you stay sane, help you stay in the right mindset as the market does what it does, right? Throws all kinds of turbulence your way. It's a dangerous place when you've made something 5, 6, 10% of your portfolio and it's declining, right? So you have this inclination to double down, to keep piling in. Suddenly you've poured half your portfolio into one stock, okay? And maybe your judgment is wrong. That's always possible. So that's really the limit for Guy Spier is 5%, which from my perspective is quite conservative, right? But that's what he has found works for him. Why am I good at doing nothing? I think I have a pretty good fortress, he says, a fortress that will carry me through whatever this time is in the markets. So he's very comfortable with what he owns in the portfolio. Many of these companies he's owned for many years, really understands them. This is seemingly a little bit in contrast with what he said, I think it was with the Kolkata Value Investors Club, where, when it comes to crypto and kind of the speed of technological change today, he's quite nervous. He's quite nervous. He finds that he can't ignore crypto and tech that's coming out of Silicon Valley anymore because it has the potential to disrupt everything he's doing, everything he owns in his portfolio. So, those comments seem a bit at odds to me, and it'd be interesting to drill more down into that with Guy Spier. But as of a week ago, he seems pretty comfortable with his portfolio. Sorry, guys, hold on. So back to the 5% max positions and kind of the conservative nature of how he constructs his portfolio. The reasoning here is really my goal is not to shoot the lights out, but to do everything I can to ensure that the probability that I don't get a satisfactory outcome is extremely small. So Naval Ravikant talks about this as well. If he could run 1,000 simulations of his life, he really wants to design it in a way where 999 of those, he's very successful, right? And part of what that means is you're staying away from the hazards that can really, ruin you. So that's why Guy Spier, 5%, that's it, 5% tops. A 10 or 15% position increases my chances of a wipeout. And the only thing I need to avoid is wipeouts. I guess I got to make more videos, guys. My voice is already starting to go, but we're almost done. Finally, at the end, he talks about how, he's really impressed by what Tom has done with his YouTube channel, his podcast, the idea of learning in public and putting your unfinished work out there and then using that to build. It's such a powerful thing. And that's really like what I'm doing here on my YouTube channel. I'm not an expert, right? I'm trying to take what I've learned, what I'm learning, package it in a way that hopefully is useful to you guys, and then I get all this feedback, right? And I get to learn from all of you, which is really sort of an exponential growth to my learning when I do that. The first stage is just taking what I think I've learned and sharing it with you guys. That step is already like an order of magnitude where I have to have that much more grasp of what I think I'm learning in order to kind of communicate it back in different words. And then I get all the feedback, right? So it's just multiple orders of magnitude that my learning is accelerated through this process. I think that's incredibly valuable. And Guy Spier is really starting to see that and playing with putting out content on YouTube, kind of interviewing people in a podcast format. So it's fun to see him experimenting with that. So that's about it, guys. This was a fantastic conversation between Tom and Guy Spier. And I'm excited. It sounds like a few months from now, they're going to be doing a follow-up one of these. So keep your eye out for that. But, like I said in the beginning, it was a real treat to do a highlights video with Tom, right? Not just some random interviewer that I've never met before, but one of the punch card fellas. So big shout out to Tom for landing this interview. And hopefully we get many more super investors kind of coming into the orbit here. But with that, I will leave you guys until the next one. Take care.